We have 3 scoops instead, down 0.3%. This means we now have 6 months in a row of negative reads on leading economic indicators, and 6 out of the last 8, considering this is August, have been negative.
The drivers of this global inflation are incredibly complex, everything from demand to multiple supply shocks. And so that the monetary hammer coming down so hard is really straining things. And it's been an extraordinary couple of weeks.
In a recent interview, Cathie Wod speaks on the hedge Bitcoin has over other asset classes in the midst of consecutive decline in key economic indicators. She's excited by the fact that BlackRock, which is the largest funds manager in the world, is beginning to show interest in Bitcoin. Sit back and enjoy.
Yes, we believe we're in a recession. 2 consecutive negative quarters of real GDP growth is one. 3 consecutive months of leading indicator declines is another indicator. Employment, I know everyone's focused on that. Non-farm payroll employment, very strong, surprisingly strong, but it is always a lagging indicator compared to the household survey of employment. So going household by household instead of company by company, because that captures more small businesses. Those employment numbers are negative on average over the last 4 months. So we think we're in a recession. But what does that do to our research? Nothing. What does innovation do? Innovation solves problems. And starting with COVID, major problems.
It's not news that the economy is in shambles presently. Economists are expressing their concerns on the declining major economic indicators. Every major economic index is pointing to the fact that the economy is in a recession. So why is it not official? Well, that's because some things are still positive. One is unemployment rate, which is still at a low 3.7% as of August. It's up from 3.3% from July, but still considerably low. 3.7 is a good number for unemployment. Nothing to be alarmed at yet. Unfortunately, it may not remain this way for long. Another bolster for the U.S. economy is the growing strength of the dollar. The dollar continues to strengthen amidst global monetary devaluations. The USD has moved 92 points on the DXY to 113 points against all the 5 major currencies, including the British pounds, the euro, and the yen. Besides the well-performing dollar, there's nothing else praiseworthy in the investment space. So far, we've had 6 straight months of recessive leading indicators. The Conference Board revealed that the leading economic index fell 0.3% in August, after decreasing 0.5% in July. For unemployment, that has so far remained low in the midst of the storm. It may not remain so for long. Federal Reserve Chair Jerome Powell has warned that getting inflation under control will involve some pain to households and businesses. Increasing interest rates means less credit availability for businesses, and this would eventually translate to a rise in unemployment. The last time the U.S. successfully used rate hikes to curb inflation, unemployment rose up astronomically. BlackRock is estimating that no less than 3 million Americans will lose their jobs, taking unemployment from 3.7% to 5.5% by the time the Fed succeeds in getting inflation to the 2 to 3% target range.
Yes, I think a lot of people have been surprised at how badly Bitcoin has done in this environment. But what has happened, especially since we first started doing our research, a lot more investors have become involved with it, traditional and hedge fund investors. And so in a risk-off environment, which is what inflation and higher interest rates has meant over the last year and a half, in a risk-off environment, Bitcoin, especially this year, has succumbed to the significant deterioration in most asset classes. I mean, this is the worst bond market, believe it or not, since 1788, more than 200 years ago. We've never been in this bad a bond market, certainly through the first half of the year. The stock market, worst through the first half since 1970. And Bitcoin was doing well until last November. It almost hit 70,000. Now it's down to the low 20s. And yes, our confidence has increased, believe it or not, in our price target. One of the reasons is the partnership between BlackRock and Coinbase. We're seeing the traditional investment firms really being pulled by their clients into supporting or providing an infrastructure for institutional investing in the space. And by our estimates alone, if institutional investors put 2.5% into Bitcoin, that would more than double the price right now. We think that that's just one use case, though.
Corporate equities and mutual fund shares are also falling. Americans' holdings fell from $42 trillion in January to $33 trillion by July. A total loss of $10 trillion is expected to be lost by the end of next month. More than $9 trillion has been lost so far in the U.S. financial markets, thanks to falling stocks and the bond market, adding further losses to the market. Cathie Wod is optimistic for Bitcoin, and she has good reason to be, because the biggest assets management firm is already looking in the direction of Bitcoin. Asset management giant BlackRock announced in August that it was going into partnership with the crypto exchange Coinbase Global. This partnership is exclusively for Bitcoin investments. They aren't interested in other cryptocurrencies. It should be noted that BlackRock holds $10 trillion in assets. This could be huge for Bitcoin, as this would introduce a lot of institutional investors to Bitcoin. If this deal is successful, then there's likely going to be a price surge for Bitcoin in the coming months. The announcement of this partnership saw Coinbase stocks appreciate by a huge 16.5% in just a week.
If you look at emerging markets, which are being terrorized by inflation right now, talk about collapsing purchasing power. While 70,000 to the low 20s is a very big correction, what it does not change is the fact that Bitcoin is mathematically metered to top out at 21 million units. And if you look at most of the supply, we're at 18.5 million units, I think, are out there right now, Bitcoin. 14 million of those are illiquid. People hold on to Bitcoin. So if we now have this institutional investor base moving more aggressively into Bitcoin, at the margin, the supply relative to demand, there's, I think, only 3 million in liquid supply. At the margin, I think it could drive the price up much more than the doubling I've said, just because of that imbalance. So our confidence has increased in that forecast for 2030.
While the U.S. dollar is at a 20-year high, it should be noted that this is enabled by the crushing debt-burdened countries in the emerging markets are suffering from their U.S. dollar-dominated liabilities. While the growth of these markets are the fastest in the world, inflation is still a big problem here. Cathie Wod believes we would see more investors from these economies hedging with Bitcoin. Hope you enjoyed watching. Before you leave, please hit the like button and don't forget to subscribe. See you next time.